So, for last
Yeah.
class, you were mentioning you discussed something in the last 15 minutes. What was that about?
So this is question only. So a portion of the question I did only in the last 15 minutes. That
Okay, okay.
was of this step. So I'm going stepwise now, which I
Mm-hmm.
want everyone to do. And
Okay.
the more we practice, the more we will be familiar with the steps, how to really
Mm-hmm.
go about it. And today I'll again start from the step one and I'll move ahead. No problem
Okay.
with that.
Sure,
And
sure.
we'll
Thank you.
complete this question. Yeah, sure, no problem. My suggestion to you is this. First of all, if you do not focus on whatever we have discussed in final accounts before today, it's fine. If you focus on these steps, because these are the steps which are going to help you in solving the question in the examination. Those whatever we have discussed until now are concepts which will help you in really connecting in a practical manner, and also will also help you in connecting to the steps that we are going to perform in a solving a particular question. Now, however, now and then, whenever I'll be going through the steps, whenever I can relate to the concept, I'll relate back and we can quickly have that feeling that yes, whatever is happening, we have already discussed. And that same thing we are doing in an organized manner so that we will not make a mistake while solving a question. Now I'm focusing on the steps because the final accounts question are really huge. It takes time, and if we forget one single item out of like here you can see there are 20 some items and then adjustments like 8 adjustments, so out of one place we make a mistake and then balance sheet will not match. And that if you want to avoid that kind of situation, go through the steps one by one, just in a very clerical way. Nothing else needs to be done. Let's quickly go back to the question that we had. We have a question where it says some person is there and we have a trial balance for him in the end of the year, and then we have some adjustments. I'll repeat the adjustments where the transactions those we found out after preparing the trial balance. So we prepare the trial balance once we are done with the journal, then ledger, then we prepare the trial balance. And after preparing the trial balance, we are finding some transactions that are left out. So basically, entries for this are not yet done. I've already repeated that so many times. Just I wanted to quickly remind that. Now, while doing solving this question, so when I say solving this question, what we are actually doing, we are preparing balance sheet and profit and loss account. So if I remember, the concept was the profit and loss account gives us the net profit and the balance sheet gives us the wealth of a particular company. If you want to know how much of profit a company has made during the year, you look at the profit and loss account. If you want to know how much of property, how much of investments, how much of liabilities a particular company has, meaning thereby how much of wealth a company has, you look at its balance sheet. And you talk to any investment banker, you talk to any investor, they'll tell you these are the documents, profit and loss account and balance sheet are the documents on the basis of which they make huge investments. These are the basic documents on the basis of which they do analysis, they forecast future, and a whole lot of other things. Anyways, while solving the question, we go step by step, like I have said. Step one says identify the accounts affected by the adjustments. I'll just quickly recap. We have already done it because you must be seeing the I have written it on the side of each of those items. So what we are doing is we are going through the adjustments. The adjustments meaning that by the adjustments given here, and we are determining what accounts are getting affected by these adjustments, and we are writing just a right on the side of that account name, or you can put a tick on it any way you can remember. So we need to know which are the accounts which are getting affected by the adjustments. That's what is the sole purpose. So writing of machinery, I'm going directly to the adjustments. Writing of machinery by 10%, patents by 20%. We saw here two of the accounts here are depreciation and machinery, and in the other case depreciation and patents. Depreciation account is not there. If you remember, if I had told, if account is not there, you don't need to do anything. We'll be preparing a new account for it. Similar way like we did at the time of the ledger. Here, this is affecting machinery first. So if you can see, right next to machinery, I had put a, and which designates that for machinery there is a adjustments. There is an adjustment. Now for patent also have done the exactly same thing. Let's quickly go to the next one. Salaries for the month of March unpaid 1500 rupees. Salaries for the month of March unpaid 1500 rupees. This is affecting two accounts. One is salary, one is outstanding salary, salary payable. One is salary, one is salary payable. we'll be going in detail about these adjustments. So I'm just determining what type of account. That's why I'm not going in detail. Why those two accounts? Why not something else? We'll go in detail afterwards, because we're going to deal with these adjustments right after a few minutes. So one is salary payable. If you can see, salary payable is not there. So I'll just look for the salary. Salary is there. If you can see here, I've already put a in front of it. Now, unexpired insurance, we had discussed the last time about unexpired insurance, which was similar to accrued interest. If you remember our discussion, we had discussed something like this. So we had a we had an insurance we paid, then for that we determined that insurance is one of the aspects and cash is one of the aspects. Insurance is a nominal account and cash is a real account. Insurance is expense for us, so it is debited, and cash is going out, so it is getting credited. So insurance account debit to cash account, 1000. Then I segregated that 500. One I said insurance account debit to cash 500, another I said insurance account debit to cash 500, just to segregate one of the errors. The error is what? This insurance was taken on October 20 for 1 year, and so it is valid till September of 2021. However, we are preparing the financial statements on 31st March 2021. So basically what it means is, from October 20 to 31st March 2021, which is coming as 500 rupees of insurance, for that we have taken the service because time has elapsed. However, from 31st March 2021 till September 2021, the time has not come because it's a future right now. We are preparing the financial statements on 31st March 2021. So therefore, it will act as an advance payment. It will act as a prepaid insurance. So meaning thereby, this entry that we did for this period, September 2021, 31st March 2021 to September 2021 was actually incorrect. The entry should have been prepaid insurance debit to cash account. The entry should have been prepaid insurance account debit to cash account. Now, if you remember, we had discussed the error and fix entry. We can just simply reverse those entries and we can fix the particular issue. Now that because insurance account was debited, we are now crediting it so that it will get cancelled. And the account that should have been debited was prepaid insurance account, and now we are debiting that. Now, so the entry freshly is prepaid insurance account debit to insurance. I focused on it because it was a purely new one, and the first time we discussed it, so I wanted to repeat the whole concept. Unexpired insurance, therefore, has two aspects in it. One is prepaid insurance, one is insurance. If you can see, none of those two accounts are here, so we'll be preparing new accounts for it. So I'm not putting A anywhere. Moving very quickly to the next one, make a provision for doubtful debts of 5%. Provision for doubtful debts are 5%. When we create a provision for doubtful debt, that means we debit bad debt account and credit provision for bad debt account. We have discussed this so many times, so I'm not repeating anything other than that. So out of bad debt and provision for bad debt, none of those accounts are here. So I'll again prepare new accounts for that. Very quickly moving to provide interest on capital. So here interest on capital is getting provided, that meaning that interest on capital is not paid. If you remember, I had stressed on that. Interest on capital is not paid, which means that what we will do is interest on capital is one of the accounts, and the other account is capital account itself. So because capital will get increased because of the interest on capital. So meaning thereby the capital account will have an adjustment entry because this entry is affecting capital account. However, interest on capital is not there anywhere, so I'm not putting A anywhere. Now, moving very quickly to the next one, commission due for work done but not received. Commission due for the work but not yet received, meaning thereby this is an income that we are making, commission we have to receive. That means we have provided some service because of which we have to receive the commission. However, we have not received yet. So commission is actually receivable, is an income. Commission is income, that is one of the aspects. However, you can see commission is not there anywhere here. And the other one is commission receivable. So it will represent the person from whom we have to receive the commission. That account is also not there anywhere. So I'm not putting A in front of any other account because I will be preparing new accounts for those. Now, very quickly moving to wages include a sum of 2,000 spent on erection of a cycle stand of employees. If you remember the example here, what I had given, suppose you paid wages on machinery, then you entered it as, wages account debit to cash. However, it should have been machinery account debit to cash because without incurring that expense of wages, you could not have used the machinery. So what I mean to say is, here in this example, it says wages include a sum of 2,000 spent on the erection of cycle stand for employees. Without those wages, we could not have installed the cycle stand, meaning that we could not have been in a position to use the cycle stand. So what I mean to say is, wages will be a part of the cost of the cycle stand. We had discussed this before. And so, which is exactly why the entry should have been cycle stand account debit to cash. However, we have entered wages account debit to cash in a similar fashion that we have done for the prepaid insurance. Here it is there. So for fixing it, what we will do, the debit entry which was done for the wages will be crediting it, so that it will get cancelled. And the account that should have been debited, which is machinery account, now we are debiting it. Very simply, the entry should be machinery account debit to wages. Here in our case, cycle stand account debit to wages account. However, you can also say cycle stand is our machinery only, and you can name it as a machinery. That's no problem. Now, cycle stand account is not there, so I'm not putting it in front of that. However, wages is there. However, wages is there. Here it is. If you guys can see, I have put a in front of it. Now, after we were done with that, then we had another called value of stock at 31st of December 2005, which is nothing but closing stock. So opening stock and closing stock concept, I will just repeat very quickly. We have discussed at least 2 times until now, but I want to stress on it because we tend to forget that part often. Okay, here it is. So closing stock and opening stock, the concept is this. I'll bring that to here. This is a nice summary I have here. Okay, so closing stock and opening stock, the concept is this. Closing stock decreases cost and increases profit. Opening stock increases cost and decreases profit. And the logic behind it was, when you have a closing stock at the end of the year, for calculating the profit, here we had an example where, if you remember, we produced 100 units for 1,000 rupees and we sold 80 units only. So for comparing this 1500 sell price, to the cost, we calculate the cost for 80 units, not 100 units. So while calculating, it gets reduced by 200 rupees, it comes to 800. So we calculate the profit by 1500 minus 800, which comes to 700. If you guys can see, hopefully it's not that small. Okay, I increase the zoom. So what is happening here is, because we have a closing stock, because we have to calculate equivalent number of units of cost, we end up reducing the cost, decreasing the cost because of closing stock, and which ultimately affects by increasing the profit. Earlier, the profit would have been 500 if we did 1500 minus 1000. However, now it became 700, 200 increase only because of that closing stock only. In a similar way, opening stock, what it does is increases cost and decreases profit. I'm not focusing on that. We have discussed so many times about it as well. Now, any doubts until now?
No.
Okay, cool. Now I'm moving to the next step. The step is go item by item. Now, if it is not affected by adjustment, show the balance in trading and profit and loss account or balance sheet. If it is affected by adjustments, then go to the working net, prepare the ledger. So the step is very simple. If it is affected by adjustment, how do I know if it is not affected by adjustment? If the A is not there, or if you're putting a tick on it, if the tick is not there. We have already done that process. Now, if it is affected by adjustment, how do you know that it is affected by adjustment? If the A part is there. Very simple. Now, once let's go item by item, and let's go through this process. One, cash at bank, adjustment is not there. What it says, if adjustment is not there, show the balance sheet, trading and profit and loss account. Can somebody tell me cash at bank goes where? Trading and profit and loss account or balance sheet?
Balance sheet.
What's the balance sheet?
Asset side or liability side?
Asset.
Asset side.
Asset side.
Oh,
Asset side.
perfect. Now let me, yeah. So if you can see, I've already done it. Cash at bank 3,170, and here you can see 3,170. Let's go to the quickly. Once we are done with it, no, we're done with it. Let's go to the next item very quickly.
Even cash at hand is also asset side, right? Cash at hand and cash at bank.
Yes. Correct. Now purchases. If you can see adjustment. Sorry. Yes. Yeah. Sorry. Perfect. Expenses. Now tell me, let me ask you one question which I have not asked until today. Will it go in trading account? Will it go in profit and loss account?
Trading account. Expense, everything will be in trading account.
So no,
Okay,
the
profit and
trading
loss.
We'll go
account.
to trading because it's a direct one. It's a direct expense.
Yes, that is a good reason. So trading account, what happens is when we have an expense which is directly related to the product. If you remember, I had given the example of the factory. Whatever expense you incur in the factory, those goes in the trading account. So here, purchase is obviously purchase of material which is being incurred in the factory itself for the product itself. It's a direct expense, so it will go in the trading account. Now, I have already put 40,675. If you can see 40,675. Now, let's quickly go to sales part. 105,000.
Income.
Perfect. Now, I want you guys to focus on this first. Okay. Always go through this. If the adjustment is not there, then only we are posting. If the adjustment is there, then we will prepare the ledger. It will come. So for now, it's not there. No adjustment is there. So it's an income. It will be posted in trading account or profit and loss account.
Trading and in credit side.
Perfect. On the income side. Perfect. Now 105,000, if you guys can see, I've already included that. 105,000 on the credit side. Now let's go to return inward. I had told you earlier that this is an addition to our list of exceptions. So I'll just give you a very quick brief about what the exceptions I'm talking about. If you remember, I had told there is a conflict in the market of conflicting of opinion between whether a sales account or purchase account is a real account or nominal account. However, we have taken it as a real account and we will be taking it up like that. And along with that, we have taken the logic that this is an exception. So even though we know all the real accounts goes to balance sheet, even though sales purchase are real accounts, still it will go to the profit and loss account because these are falling under the exception part. In a similar way, return inward and return outward are also exceptions. So until today, I've only told 4 exceptions: sales, purchase, return inward, and return outward. These also go in the profit and loss account only. Even though these are representing the goods, thereby these are real accounts, still they'll go to the profit and loss account. Having that said, let's go to the return inward. Now it is saying 600. Now my first question is this an expense? Is this an income? Yeah.
Return inwards, is it something sales return?
Return inward is sales return only. You're right. You're absolutely right.
Okay.
Yeah.
Okay.
It's an expense. It will go to debit balance, right?
It is an expense. It should go to the debit side of the profit and loss account. Profit and loss account or trading account?
It's directly connecting to the trade. I mean, so it will go to the debit.
It is directly related to the sales. Yes, it should be going to the trading account. Now, here let me repeat the concept of contra thing that I was talking about. Often the basic requirement of profit and loss account balance sheet is to give the stakeholders some information about the organization, right? So stakeholders are who? The creditors, the owners, the investors, and a whole lot of other people, government, and nearby people, competitors. A whole lot of people come into the list of the purview of stakeholders. So at the time of giving the information, if the information is given in a particular right way, then it will fulfill its purpose. Why I'm repeating that is this: if I say my sales is 105,000, however I also say my sales return is 600, is that depicting correct picture of sales? Because somebody will look at the sales, you will say no, a company has made 105,000 sales, 105,000 sales. However, actually the sales is 104,400, isn't it?
Yes.
So what logic I'm putting in is, I have already repeated so many times earlier as well. So I just wanted to focus a little bit on that. Here is a concept of contra. So there will be concept of, instead of putting something in the debit side, you deduct it from one item on the other side. The reason is to show correct value of a particular item. Very simple reason. Same thing we do for debtors. When we have debtors of suppose 50,000, however, we know that bad debt during the year or provision for bad debt during the year is 2,000. That means what we are saying is, even though we have receivables of 50,000, but out of that 2,000 we are expecting that we will not receive. So what is the actual amount of bad debtor that we have? That is 50,000 minus 2,000 is equal to 48,000. So instead of showing debtor in the asset side and provision for bad debt in the liability side, what we do is we deduct both of them together and the net value we show. So the contra thing everyone is familiar with. Now in the what we are going to do here now is, we have already put the cells. Now, instead of putting the return inward in the debit side, we will deduct it from the cells. We will deduct it from the credit side. This is how it looks. So less return inward 600, and we will calculate the remaining value, which is coming as 104,400. Any doubts in this? Awesome, fine. Can you guys tell me what will happen to return outward then in the similar way?
Deducted from
It will increase the
purchases.
purchase. No, it will add to purchases.
It will decrease the purchase. Now tell me what is return outward? What is return outward? You have purchased something, now you're returning it, right? You have purchased something, now you're returning. Yeah. So it is a kind of income. Definitely you can know because it is in credit side, right? So instead of putting it in the income side, we are deducting it from the expense side, from the debit side. So less return outward 500, and I've already put the calculated the balance, which is 40,175. Any doubts in these two? I can repeat the concept, no problem. Okay, now let's go to the wages. Where will it come?
Trading account.
No, that's a wrong question I asked. You should have told there is an A in front of it. We are not going to do that. We are not going to directly put it to, there. So what we will do is, we will go to the working note and we will prepare the wages account, and in that we will put this balance. That's all. We will put this balance. What is this balance? Debit balance, right? In the wages. So I'll prepare a wages account. So I've already prepared a lot of accounts. Let me see which one is a wages. Salary, salary payable, insurance, prepaid insurance, bad debts, provision for bad debts, interest on, okay, capital account, commission receivable.
Is it good like if we maintain where you had maintained? I'm not able to see that. I'm able to see the title, but where it is? Oh, okay, it's hidden over there.
So I have actually solved this question already, but I want to go step by step.
Oh,
so by the time we are going step by step, I'm now making those visible. Yeah. So here we have wages account. I wanted to ask you guys whether it will be posted in the debit side or credit side. Now I have already shown. Can you guys
debit side because expense debit side because expenses are like debited.
Yes.
Like nominal. It's a nominal account.
Yes.
So debit the expenses, then losses.
Okay. So I just got the 10-minute pop-up, and it will force log out for everybody. You can join in the same link and we'll start from wherever we were. Yeah. So the wages account will have a debit balance, because in the trial balance also we can see it is a debit balance only. So this is debit balance and this is credit balance, right? So in the wages, it is a debit balance only. So if you remember the concept, whichever account has a debit balance, the two balance brought down will be in the debit side. Can you guys relate to that?
Yes.
Yeah. So what I did right now, I'll just repeat, right? I went through step 2. All other items did not have an adjustment. However, this one did. If affected by adjustment, what I do is update the respective ledger in working note. What I'll update, I'll just put the opening balance. Whatever balance that is given, I just put that there. Here. Wages account, I prepared a ledger. There I put the debit balance. Whatever will come, I'll see afterwards. When I'll be going through the adjustments, I'll see them. Okay. Now let's go to a similar process one by one again. Now let's come to power and fuel. There is no adjustments. Can somebody tell me, is this a expense, income, asset, or liability?
Expense.
Perfect. Now more important question.
Profit and loss.
Profit and loss account.
Profit and loss.
Profit and loss.
Trading. So see, I understand the logic. I understand the logic that you guys have already understood. Whatever related to the factory, that will go to the trading account. Whatever not related to the factory, that will go to the profit loss account. Here is an item that gives us the confusion. So I'm telling you, this is actually related to the factory, which means that will go in
trading.
Wherever you see power name, no, that will go in the trading account. Power is always related to the manufacturing or related to the factory. So again, you can also tell, factory also will have electricity. Sorry, the office building will also have electricity. However, we will practice this as a standard thing. Wherever we see fuel or power or fuel, we'll always put it in the trading account. We'll assume, basically, basic standard assumption is that wherever the power or fuel are given, those are related to the factory. So let me quickly go to the trading account and let me unveil that. Okay, 4730, if you guys can see, I've already put in the trading account. So this is the trading account. and this is the profit and loss account, the other side. So I've already put 4730, which is 4730 here. Now let's go to carries outward. Now tell me, is this an expense, income, asset, or liability?
Expense.
Perfect. Now my question is it a trading account? Is it a profit and loss account?
Trading.
Trading. Now let me ask you, what is a carries outward? Now what is a carries outward? So something is going out, right? So, and we are, for the transportation of that, we are paying some money. That's what is meaning by this word, carries outwards. We are carrying something outwards and we are paying some money for it. Transportation charges for carrying something outwards. What would go outward in a
Can I
general
ask
logic?
one thing? Is it a sale, right? It's a sale.
Yes.
So something
Yes.
related to sale is carrying. If it's a transportation, which so it would it's an income, right?
No, it's expense only. It's expense only. See, no, this is the debit side. You are
Why?
obviously
Because
paying some money.
if we are selling something,
Mhm.
okay, fine. Okay, I
Sale
thought in
sale
this
is
sense,
separately
like,
reported. Yeah.
no, if we are selling some product of us and if our customer is asking us to transport that to their premise, then we will
Yeah.
take that, right?
Yeah.
So I thought
Yeah.
it's in that sense, like it's
It's
related
that
to
sense
the
only.
sale.
No, it's that
Okay.
sense only. However, it is not sales part. For transporting that goods, whatever the money you pay to the transportation company, it is that portion. Suppose you
Okay.
made 105,000 sell during the year. All the
Mm.
customers told you, you know what, we are not coming to your factory. You send the goods to our office. We are giving you the location. So we had a transportation agency and we had the lorries made and all of the loading, unloading done. Then it went. We paid the transportation company agency, whatever money we had to pay. This is that money. This 3,200 is the expense that you are making for sending the goods to the customers. Now that I have told, whenever there will be carries outward, that means it must be related to the sold goods. It can never be for the purchased goods, right? So because purchased goods comes in, it never goes out. Make sense?
Right.
So it is never related to the factory because it is happening after sell only. Sale is already done. Does that make sense?
Yeah.
Because it is directly related to the sales. And so it will go to the profit and loss account, 3,200. Is that clear to everybody or should I repeat that?
No, it's clear.
Yeah.
Cool. Carries outward in the profit and loss account, 3,200. Now, I'll repeat once more. We are in step 2. We are going item by item and we are putting it in the respective place, either in the working note or in the profit and loss account and balance sheet. Now, let's move forward to the next one. Carries inward in a similar way. What is it? Expense, income, or asset or liability?
Expense.
Perfect. Will it be posted in the trading account or profit and loss account? Next question.
Profit and loss.
Think about
Account.
it. Think about it. Carries
Oh,
inward.
purchases. Okay, it's trading.
Yes.
Trading account.
Perfect. So here is carries inward. 2040. If you guys can see, 2040. Now let's go to the next
So
account.
which one is it coming in? Is it coming in trading account?
Yes.
Yeah, because this is raw material.
Yes. So this is directly
Okay.
related to the factory. Thereby. Yeah. Now let's go to the next one. Stock 1/1/2005. If you can see that the balance sheet is getting prepared for 31st
I have a
December
small
2000.
doubt.
Yeah. Go ahead.
If in the carriage outward, then why didn't take it in the account of trading? Why we went for profit and loss then?
So the reason is whatever happens after sales, no, that is assumed that it doesn't happen with the factory. Whatever happens after sales, that is assumed that it is not affecting the factory. Those expenses should go in the profit and loss account. For example, after sales service, those expenses are there. For example, selling and distribution expenses. Suppose you are advertising. Suppose you are giving some samples. All of those expenses are assumed that those are not related to the factory. Getting my point?
Okay, there is. Yeah.
In a similar way, the transportation expense as well, to transfer the goods, transfer the sales to the customers. Okay. So I was at stock. Yes. The next item is stock 1/1/2005. What I was saying was we're preparing the balance sheet on 31st December 2005, meaning at the end of the year. And here a stock is given on 1/1/2005, meaning that it is the opening of the year, right? So what I'm referring is this is nothing but opening stock. Can you guys relate to that?
Yes, yes.
Yeah. Now, if you remember, opening stock is what? What it does? It increases the
Decrease
cost,
the profit.
decreases the profit. It increases the cost and decreases the profit, meaning that it is expense, I can say, right?
Yeah. Yes.
Yeah.
So I'm just writing that as well here. This is expense and this is an income. So we'll post it in the expense side of the profit and loss account. Can you see? To opening stock, 5,760. And obviously opening stock we are talking about. So this is obviously in the factory only. Yeah. So it is coming in the trading account. Any
So
doubts in
Deepika,
that?
in trading account, the first entry should be the opening stock. Is that so?
So until now, no, I have not talked about the format of balance sheet or profit and loss account. So that is absolutely good point. You should put, there is a particular format, which items normally come in the front, which items should come in the end. That while practicing, we will practice. However, I'll also give you a brief kind of thing about that. You are right. Opening stock should be the first and the sales should be the other one. And the closing stock should be coming after the sales and a whole lot of other things. And especially about the balance sheet also, there are a lot of things that I haven't told, like the format. So we have a particular format. If you remember in a question when solved, we had categories, something called fixed assets, something called non-current assets, something called current liability, something called non-current liability, and so on and so forth. I have not talked about it until now. I'm just solving the question so that our balance sheet will match.
Yeah,
Then
sure. Go ahead.
we'll move to the formatting part. Yeah.
Sure.
Now, very quickly, land and building, 40,000. Is it asset, liability, expense, or income?
Asset.
Perfect. Asset side, land and building. Yes. $40,000 I've already put, if you guys can see. Now let's go to the next one. After land and building, there is machinery. And can somebody tell what should we do here? There is
Adjustment. So
for
we
it.
should go to the
Absolutely.
ledger.
We should go to the ledger first. So here is a ledger. It should cut in the debit side or credit side, the balance.
Debit side.
Anyone in doubt?
Debit side.
Debit side, yeah?